So what are assets? Before we work on a formal definition of assets, let's just look at some examples of what assets are. So examples of asset accounts include cash, the most common and everyone's favorite asset account, office supplies, equipment, furniture, building, land, and there's lots of other different types of assets, but those are just the common ones that are easy to understand. So earlier I defined assets as saying they are stuff the company owns. Now that's just an informal definition. And the book defines assets as assets are economic resources that have a future benefit. I don't really like the economic resources part of the definition because what the heck is an economic resource? But notice I have underlined that they have a future benefit. So that's critical to the definition of assets that we're working on. Now, I'm not going to make you memorize a certain specific definition of assets and then ask you to spit it back at me word for word. We're just trying to come up with a working definition of what an asset is so that when we have a transaction, you'll know, is it an asset, is it an expense, is it a liability, etc. So I came up with what I think is the best definition of assets. It's properties of value owned or partially owned by the business. So basically it's just the same as saying stuff the company owns. And technically, remember, they could be partially owned. Just like if you have a car, but you have a loan on the car, you don't own the whole car. The bank owns part of it because that's the loan. So even though you only own part of the car, it's still your asset. So assets are properties of value owned or partially owned by the business. And they have a future benefit. In other words, they have not already been used up. So why do we say they have a future benefit? My classic example of the difference is, let's say I own a lawn mowing company and I'm just beginning the company. So I go to the gas station, I buy 1 gallon of gas for my lawnmower. And I plan to use up that gallon of gas today. So does that gallon have a future benefit beyond today? No. So that gallon of gas is not an asset. It's just going to be an expense. And we'll define expense later. But let's say I get tired of walking to the gas station every day and getting 1 gallon of gas. Let's say I go to the gas station and I get 10,000 gallons of gas and I put it in a tank. So those 10,000 gallons will take me a long time to use up. So do they have a future benefit? Yes. So because they have a future benefit, those 10,000 gallons of gas would be considered an asset. Now, usually when we're working with transactions, it will be obvious that something is an asset. We'll usually be dealing with things like cash and equipment, furniture, building, stuff like that. But just remember, assets are properties of value owned or partially owned by the business, and they have a future benefit. They have not already been used up. And lastly, remember, assets are often financed, which means they're partially owned by someone else, like a bank, by way of a loan. For example, if you have a car loan, like I said earlier, your car is partially owned by the bank. When assets are financed like this, the company owns part of them while creditors own the other part. This is all reflected in the accounting equation. Assets equal liabilities plus owner's equity. If the company owned an asset valued at $10,000 and $3,000 was still owed to creditors, the accounting equation would read as follows. $10,000 assets equals $3,000 liabilities plus $7,000 owner's equity, or the owner's stake in the asset.